All right, guys, time for a recap. Let's catch everybody up from last week into this week and how we traded. Now, some of the bigger things obviously going on. Powell speak today and tomorrow, back to back, right? What are we suffering from that? Well, the markets do not like to drop. They actually hate dropping during a bear rally push that we are getting into right now. If you look at that chart, we've been into right now. And every time we come into, that's our weekly, a daily hot RSI, which we were preaching weeks ago. As we come into the hot, we have a high percent chance to turn around. And not that it does instantly, right? Nothing is just perfect. But right now, we have days coming into an RSI top, and you see all these other little tops where it got hot or close to hot. We have multiple days for this thing to decide, right? The last one I wanted to go down here, we came very close to hot, and we waited like 1, 2, 3, 4, 5, 6, 7, 8, almost a week plus to get that little bit of a pullback. And it got bought up in the next sequence, right, of higher low and low. So it got bought up and, continued to high, which is perfectly fine. Now, when we come up to what we had right here, same jam, a little hotter, a little faster, Powell catalyst, a little different. And just to reiterate, we'll go to a cleaner tab here. We had let's go to weekly real fast. There we go. We had the red weekly tab. Now this red weekly fib here. Now this Fibonacci is one that I've been waiting for quite some time. This is the one that we called the golden reversal on, 1618, right? And this guy pushed all the way back up. And if it does not fail this 100, where does it go back to? 50, 38, 20, right? So this is the cycle that we are pushing on right now as the market is, change this, FOMO rallying. So right now we're at that 50 halfway point, okay? And on this specific one, if you don't have this fib, we draw it from, just in case you guys don't have it, this is a weekly that touched the 100 EMA weekly 5.2, drag that to all-time highs. This is the one of the prominent ones that we were watching for the rising wedge failure to hit the 100, but we got new catalyst on the way back up, obviously resulting in them fabricating the debt ceiling is a good thing, so on and so forth. A lot of different little things actually as far as catalyst goes. But indicator-wise and technically-wise, we have a really good inside recovery of the 100. So when this happens on Fibonacci, it'll complete the cycle, 1618, break into the 0-100 chamber up here, right? The big old square that starts the internal Fibonacci. Once it comes from 1618 and breaks through the 100, it goes to the 50, relax, chill, 3820 potentials, okay? Now, I'm not waiting for a big old correct that's going to be selling off for weeks and weeks and weeks. I assume this dip will probably get bought in the FOMO rally or continue. So just to reiterate from last week, we had these Fibonacci points, right? Let me finish this breakdown quick. That were from Powell. This Powell meeting right here, we had completed the Fibonacci cycle, okay, to the 261. Now, when there's a confirmation of weakness and it heads back down, it just reverses that Fibonacci cycle. So the 2618 becomes the top, right? We got that. Then once the 2618 is lost and rejected with confirmation, as we've seen, it will walk itself down to the 1618, right? Purple guy. Here. Once that breaks, your next target is going to be the 100 fib. Once that breaks, next target is back to the golden pocket, right? So walking itself back down on the Powell is what we were waiting for. That's where we were buying puts here, buying puts here, buying puts here. I had a couple days worth of put buy. Now, those are getting pretty good right now, and I wanted to wait till the 10 SMA daily, which was our target that we had hit today, to cover some of those. And I figured we'd get it eventually, but we had a little static turmoil. And what we were talking about before is the markets do not like to go down on a FOMO force up like this in these bear market rallies. And they are very, very, very hard pressed for shorts because they don't want them to win at all. So when you see the opening morning market dump, and they do hit support, it's not like they don't hit like a great level. They pop them up higher than the freaking open of that day, right? So if you were shorting the leak down, expecting the market to just dive bomb that whole day, you would get pushed out. So if you chase the short and entered a no confirmation, pop back up, it would have slammed you up pretty good. If you're not using long-term options or slow play or very small positionals for swing, you might get scared of that day trade, right? And then again, same thing here, pushed all the way back down, got our target, this teal bluish line right there. That's the 10 SMA on the daily representation inside our 5-minute frame. Now, I looked for beautiful shorts all the way down, and then I looked for the gap fill. Well, you can see it pushed into the gap, gray box right here, and then just wick right on the 2360 fit. Okay, well, it doesn't want to go any lower. That's fine. Squeeze back up. We got out around here at about 10:30. So I exited my short here. We made just under $900 for the day, which wasn't too bad, but that short that held the gap, pressed it back up to moving average 100, fell, pressed all the way back to 200, fell. Same exact thing we see in yesterday. These markets, they don't like coming down of these big FOMO rallies. They give shorts a really hard time. Another reason why we took longer dated options to give these things a lot of breathing room, right? So what comes next is Powell had nothing new to say. It was pre-written, and most of his answers were almost identical to the last anyway, even the way and verbiage that he used. So we had a big old nothing sandwich today, as we usually say. So that's okay. But tomorrow we're going to have more Powell, right? Now, I'm moving the Fibonacci back, okay, to the daily white one. So we're going to go right here from the gap up candle. My team knows exactly where this is at. And this is now the reversal sequence I'm going to be looking for to continue, okay? So the Powell Fibonacci sequence worked out perfect, got the resistance, came all the way back down. Now we're at the golden pocket. If this happens to fail, we break out of that range, 2618, 1618, right? Those are going to be your two targets. That's my ending target for these long puts, to be coming down to hit some of these price levels. Now, some of them are going to be the filled gap, got to get through there, right? And it could cause a double gap for all I care if it opens up under yesterday's lows and creates a double gap where the prior gap no fill is sitting with a new gap. So we have an old gap from gap up prior to a new gap today or tomorrow trade day. That would be fine. I don't mind gapping through and coming back down to 433.44. But that leads to believe then it would really need some speed or, progress through Powell. And again, he's going to be speaking again tomorrow. And that's just not something you really want to mess with, because if this happens to do the same thing, drowns out, maybe fills the gap, fill hits here, pops all the way back up, annoying, and then finally lets loose, we're still going for that 50 halfway point in 2618. So between the two long-standing Fibonacci points, we have a nice little box between our daily and our weekly we've had on for a while now. This guy right here. Now that box becomes 433. And that's in between the 2618, which is the daily gap up body target, and the 50. That's about all I see for a potential easy short, right? And none of this is really easy. It's been pretty hard off this lower high top to come back down and hit. But I think this progression down here would be the last leg down before it does pop up, if it does. So what I mean by that is we liquid wash that 200 SMA. Okay, we're on the 30-30 right now. Here's our 200. Okay, and we just open and press that. Not today, but yesterday, right? Got the cross of the 50 and the 100, all the moving average said so. We hit it right here. That was pre-market. And something that we know about live tags and always wanting to tag, it usually likes live tags before it has progression. Now, doesn't mean it can't progress for a couple of days, but it will pop back up and hit that, because that's going to be a magnetable offense. That's going to come back and magnet that eventually. And we don't know if we're going to get a follow through tomorrow. So something along the lines of option B coming out would be holding that gap, right? Holding the golden fib again, pushing back up, right? Finding moving averages like either the 50 or the 100 on the 30-30, or even Powell is saying something, more along the crazy, coming back down for the 200 to meet resistance before it wanted to actually come down to that 433. Now, again, we never tested, you see right here is a big miss, not today, but the day prior, starting the week here, that 200. We did not get that tag. We got the cross, we got everything else, everything worked out to the downside, but we never got the tag. So that magnet is still going to be in the back of my head watching that, because if this happens to come back down to, only half deviation on the 30-30, which is right here, right where the pocket is, hits that and then pops back up for a day or two to hit that 200 and then to chop range and go down, well, that could easily happen. And it doesn't even need to continue. It could actually hold this no fill gap, right, for another whole day and just do another chop fest on Powell, then another low day, and see how the rest of the Fed Speaks and data cluster Thursday plays out, because we haven't had those magnet tags yet. We need those magnet tags of the 200. We have to remember those. And that's a lot of the reason why it saved ourselves in a lot of trades coming up, and how we predicted a lot of the other ones where the moving averages do not get tagged. Okay, it's dangerous stuff. So we have no live trading of that 200, and we have no live trading of the 50 or 100. So if you're looking just as a moving average tag system here, look, yesterday, today, nothing, and today's 50. So 100 and 200 are the only ones that have 0 tags. I guess the 50 did get one today, so we can cross that off, but we did not get one yesterday, start of the week. So that being said, if we do hold the gap, we don't create another double gap back down and hold Powell, we can wait for the 100 EMA to catch back up. That's the next slowest moving besides 50. So the 50 was tagged today, holds support again, pops back up, hits the 100, flushes down again. Then the next pop is going to be to that 200 as well. So those moving average systems, they got to play catch up, right? So without those gaps, no fill, no tag, that's what we're going to look for. And for the continuation tomorrow, it's just another Powell day. We're in the bottom side of our oscillation indicators. We're not going to see anything till the meeting. It was brutally annoying to trade throughout the day. It gets very slow. So we're not going to make any kind of big adjustments or big trades until we get some nice clarity from the Powell man. So that is it. So just to reiterate, here, oscillation indicators are on the bottom of the hemisphere, right? We're on the bottom. So if we do continue that, or through the night, if it gets one of its futures pops back up and moving averages catch back up for resistance, moves back down for the morning and stays into that bottom channel, we're going to continue down to 433 and then continue, hopefully for me, down to that 50, which is 432.68. And that's going to be through the first gap. Now I'm probably going to hold some puts still. I haven't closed any yet. 10 SMA is that first targetable short daily, which we did hit, but I still think we have some downside available here, even to the 50. And if it wants to come back down and hold the 50, then range back up for a random FOMO move to continue, that's fine. It doesn't matter to me because the weekly still has a little bit of a sideways action to do, especially in oscillation indicators. We did get a dark green bar here, nothing here, and the weekly RSI did turn back down. So MAC is lagging here a little bit, so we could kind of hang 10 up here for a little bit before it comes back down. So don't just short the whole kit and caboodle at the bottom and expect the drop next day. So those are the two options we're going to be looking for, and we'll do a bigger recap tomorrow after Powell and then see what the continuation for the rest of the week looks like into data. So join us for those as well.